On a Friday, oil prices rose above $120 per barrel, and today the market is consolidating in this area, which means that the asset is likely to continue a bullish run. Its further growth can be supported by the actions of the European Union, in particular German policymakers. German Chancellor Olaf Scholz started his tour of several African nations with a view to finding new energy supplies. The fact that Europe first announced its plan to reduce oil and gas purchases from Russia and only then began to search for alternative sources will only contribute to further gains in commodity prices, especially in oil ones. After all, Europe urgently needs to find alternative sources. Otherwise, the region will face a full-fledged energy crisis. Potential suppliers are expected to offer energy at inflated prices, but there is no way out. Against this background, oil prices may well advance to $130 per barrel in the near future. Now let's take a look at the trading chart. Despite overbought signals, Brent crude oil futures continue to edge higher. Speculators keep boosting their net long bets, ignoring technical analysis signals. If upside momentum remains strong, the benchmark may approach 123.75, the local peak posted on March 23, and then even hit a new record high. The risks of facing full-fledged energy crisis and upbeat jobs data from the US Labor Department led to a decline in the value of gold. The yellow metal dropped back to $1,850 per 3 ounce. In fact, the quote is still trading within the sideways channel of $1,830 and $1,870. Deviating from the set boundaries only for a while. In order for a signal of a range breakout to be confirmed, the quote needs to consolidate above the upper boundary of the range and fix below its lower boundary on the daily chart. Given the ever-increasing risks of real energy shortages, gold has extremely limited upside potential. Safe haven assets are now less popular than strategic resources. Moreover, the longer Europe looks for new oil and gas suppliers, the higher the likelihood that gold will suffer losses. The Russian currency has been drifting around 61 rubles per dollar for a week, thus ignoring all fundamental factors. Apparently, market participants are awaiting further steps by the Bank of Russia. The regulator is set to hold a meeting of the board of directors on a Friday. However, there is still no clarity regarding the scale of a monetary policy easing. The central bank may slash the key interest rate to 9%. However, even its emergency cut to 11% had almost no effect on the Russian currency. The ruble remained at high levels. It's still too expensive for the national economy. Moreover, its current exchange rate threatens new problems for the industry. Against this background, the Russian government and monetary authorities are openly trying to reduce the value of the ruble. At the same time, interest rate cuts seem to be ineffective, and the market is waiting for the central bank to reduce the level of mandatory sale of export earnings in a foreign currency to zero. Perhaps this will change the situation. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.